everyone. Darcel Fogarty with Keller Williams Balfour here. We're so excited to have you for our investing group. And of course, everyone knows Tasha.
Hi, I'm Tasha Withers, Keller Williams Realty. We're so glad you can join us, and we're so happy to have Jenson here with us today.
So today our topic is LLCs, which is a topic that everyone's been really anxious to have and interested in. Of course, we had to move this to a video production because of the coronavirus. And so we're not meeting in public. We're going to record the event so that you all still have access to it. So today we're here with our real estate attorney, Jensen Mauseth. Jensen, can you tell us a little bit about yourself?
Sure. My name is Jensen Mauseth. I'm with Mauseth Legal, LLC. I'm a real estate attorney, but I also handle a lot of corporate formation, which includes forming of LLCs and C Corps. We also do a lot of trust and estate type law, and I'm very happy to be here. Thanks for having me.
Nice.
Yeah, thank you.
So welcome, everyone. We're going to get started. So today we're going to be talking about what an LLC is, what it can do for you, how you can form it and run it, how much it costs, and just all the nitty-gritty details about LLCs. So Jensen, can you just explain what an LLC actually is?
Sure. An LLC is a separate legal entity other than a person. So if you think about it, whenever anyone owns an asset, it's a person that owns it, that asset. So an LLC is a separate legal fiction, if you will, that would own an asset outside of your person, and then you own that LLC.
Okay. And then why would someone create an LLC and put an asset in it?
There's a whole number of different reasons. You might do it for tax purposes, but in the context of this, for real estate investment, the primary reason to do it is to limit your liability personally if something were to happen at that location of the property that you own.
So if we had a piece of property, let's say it was a rental property, and someone visited the renter and tripped and fell, or something happened to the renter, and they decided that it was worth coming after the owner, how would the LLC come into play then versus if it was not in an LLC?
Right. So in the typical situation, if an individual owns a rental property and they do not have an LLC or other corporate structure, and they own it themselves, then that's typically called a sole proprietorship, or just they own it personally. Mm-hmm. If in your situation someone tripped and fell on the property, then you personally would be unlimitedly liable for all of the damages that person incurred. So what that means practically is if, say, they had $2 million worth of damages because they had a broken leg and surgery and whatnot, they could come after your house, your investments, your car, your cash, your bank accounts, etc., would all potentially be subject to a judgment on that case. Now, what a limited liability company does, if the limited liability company owns that piece of property, it creates a barrier between you personally and that litigant, such that the home, or the rental property in this case, would be owned by the LLC, and any plaintiff is limited to damages in the assets of the LLC. So in a lot of cases, my clients will have, say, one rental property in the LLC. Someone slips and falls on that LLC, or
the property inside the
LLC, and they sue. Well, let's say the house is worth $500,000 that's there. So the maximum that litigant can obtain is the value of the property, or $500,000, and your personal assets are safe, or at least they are safer than they would be without the LLC. Now, I'll give you a caveat with that. There are ways that you can go through an LLC to be personally liable, but if you set it up correctly and you manage it properly and you don't do what's called commingling funds, or
which is
something
important.
like that,
We'll
it's
talk
very
about
important.
that in a minute.
Then you should be, for the most part, protected.
And we want to talk about all that, setting it up, running it, commingling of funds. But before we switch, let me ask one more question. So you own rental properties. Would you want to put them all in one LLC? Would you want to have separate LLCs? And talk a little bit about if your real estate was in a different state, how you might set up that structure.
Okay, so that's multiple questions in one. So let's talk about one LLC versus multiple LLCs.
Okay.
Let's say you own 4 properties. You can, if you have all of them in one LLC where the LLC owns all four, then the maximum amount that someone can sue for is the value of all four properties.
Right.
Okay. So they're going after the total assets in that LLC. So in some situations, if you have four properties, it may make sense to have four LLCs
Right.
instead of one holding all four. Because if you have four separate LLCs, then if a renter gets injured in one, they can't sue for the assets of the other.
Right.
Okay.
Great.
Now you can have LLCs that hold, say, two properties, and let's just say you had multiple properties. Let's say you had 10.
Okay.
In some cases, it makes more sense from a financial standpoint and a management structure to say have, let's say, instead of having 10 separate LLCs, maybe you have 5 LLCs that each have 2 properties.
Okay.
Okay. Or you have 2 LLCs that each have 5 properties. The
Okay.
idea is the same in that you try and separate the assets out so that a litigant cannot attach all of the assets. But in terms of ease of management, for some people, sometimes that makes more sense.
Right.
Okay. For properties in another state, if you own a property in, say, Arizona, but you live in Washington,
Right.
the main reason you have an LLC there is not only a limitation of liability, but it's also an issue for your estate when you pass. Because if you have a property in Arizona and you own it personally and you pass, then you have to have a probate not only in Washington, but you also have to have one in Arizona. And that's not, probates aren't a big deal in Washington. They're actually
Right now, right?
Right now,
Right,
yeah.
yeah, uh-huh.
My common advice to clients is that you either pay now or pay later. But it's, for the most part, it's fairly cheap in Washington to do. Other states, that's not necessarily the case because some other states, you hear horror stories of them, where they have statutory attorney's fees, which are a percentage of the assets of the estate there,
Okay.
and they're required. So in those types of states, you find out that almost all of the real estate is owned in a trust or owned in an LLC or owned in some sort of corporate entity.
Right. And could you have a piece of property in one state and an LLC in another state and put the property in another state's LLC? Or does it have to be an LLC in the state where the property resides?
If I understand your question,
Uh-huh.
you mean can I have a Washington LLC that owns a piece of property in Arizona?
Legally, yes.
Yeah, no
I
problem.
get that I get that question quite a bit.
Yeah.
Okay. And then you can also have LLCs and holding companies that own LLCs.
Right.
Can you explain that a little bit?
Sure. So part of that is a tax purpose issue. But let's go back to a scenario where you have 4 rental properties. Each one is owned by an LLC
Okay.
individually. So you have 4 LLCs.
Uh-huh.
You can have a holding company that owns all 4 of those LLCs.
Right.
And that holding company can not only own those assets, but can also collect all of the rents, can do all of the payments for repairs and for improvements and things like that. And that sometimes makes it easier from an accounting standpoint.
And not only easier, but advantageous when it comes to taxes, right? Aren't there some tax advantages to doing it that way?
There are, and we'll talk about that in a sec.
Okay.
But for right now, from a management perspective, sometimes it's easier to have a holding company to do that. But that's really a question that you need to talk to your accountant about.
Right.
Right? So I definitely recommend that all of your clients talk to accountants as well as an
Absolutely.
attorney about
For
when they
sure.
try and set something like this up. As far as the tax consequences go, there is something called an S-corp election that you can make if you own an LLC. What the IRS does is the IRS sees LLCs as a pass-through entity. What that means is that if you're a single owner of an LLC, it looks as though you're a sole proprietorship, to the IRS. And that means that all of the income generated by the LLC is your income. So it's all subject to income taxes and employment taxes, right?
Okay.
Or dividends, et cetera. How you do that. The S Corp election, you file a IRS Form 2553, and you can elect to be taxed as an S corporation.
Right.
Now, it doesn't change your corporate structure. It's just changing how you're taxed. But this is also, again, something you definitely want to talk to an attorney and talk to
Your
an
tax
accountant.
consultant, right?
Yes, about. But what that does is that allows you to take a wage
Right.
and pay yourself a wage, and then the wage has to be a reasonable wage. And then it also allows you to take dividends. Those dividends are not subject to the employment taxes. Employment taxes, I'm just going to throw a percentage out there, but they're about 8%, right? So this is things like federal unemployment tax, Social Security, Medicare, et cetera. A dividend.
So you don't have to do that.
If you're taking a dividend.
If you take a dividend.
Right.
Okay.
So if you are taking an S Corp election, and let's say you're paid $100,000 a year in income, if you were a sole proprietorship without doing the S Corp election, all of that $100,000 would be subject to employment taxes. Okay. And then you have your income taxes on top of that. Okay.
Yep.
But if you do an S Corp election, you have that same $100,000 in income, $50,000 is paid to you as a wage. That has an 8% employment tax onto it. And then the other 50% is paid to you as a dividend. That does not have the employment tax onto it.
Okay.
So you're paid $50,000 minus the 8%, so minus $4,000, and then $50,000. So your income tax is, or the amount of tax that you save is about $4,000 in that scenario, right? It varies state to state. But.
And you can still take off your expenses and the same way that you would for your tax purposes within that.
Yes.
Right.
Corp.
Yeah.
Right. You have to talk to your accountant about how to do that, but that's all what's called above the line. So it's above the net income amount that you get paid in a wage and whatnot. But the wage is essentially an expense to the company.
Okay.
And all of your improvements and repairs are also expenses to the company.
Right.
And if you need recommendations for tax accountants, let us know, because we know several. And also, that's how Pat and I run our real estate business. We have a holding company that is an LLC, and then it owns all of our other LLCs. So we get a wage from that, and then any money that we take on top of that comes in the form of dividends and is taxed at a better rate. So we can speak to that a little bit. It's a really nice way to set it up. But your tax accountant will take care of all that for you and tell you how to do it, and if it makes sense.
Yeah.
So I've heard from some people that have more than 10 rentals that it became so complex managing the different LLCs that they just chose an umbrella insurance. So if I have just one rental, for instance, I have a duplex, would I choose to have an umbrella policy or an LLC or both of them?
Well, I mean, it's a personal decision on what you want to do. What the LLC does that's nice is it creates that barrier of liability between the plaintiff and yourself personally. What the umbrella policy does, and you can hold an umbrella policy either at the LLC level or at your own personal level, but the umbrella policy at your personal level just gives the plaintiff an avenue, or what's called in legal terms a deep pocket, to go obtain the funds to the damages that they seek, right? And so instead of coming after your home and your car and your retirement policies, they go after the insurance policy that would pay out. So it's an added layer of protection to you. So the most protection you would be able to have if you wanted to add multiple layers of protection would be an LLC barrier that also has an umbrella policy, and then your own umbrella policy.
Oh, so both.
Yeah.
Okay.
And if you wanted to even add more, like Darcel has, you can have that holding company, which would provide another layer of barrier in between the plaintiff and your own personal assets.
Right. So now if I was an investor and I have no rental properties and I'm thinking about investing in real estate property, I'm starting to feel real nervous that all of this legal, that my tenants are going to be looking to come after me. How often does this happen? And how concerned do I need to be as a landlord having rental property? And what type of legal actions have you seen?
Oh, well, I've seen all kinds of legal actions. I mean, from a trip and fall on stairs to a faulty handrail and all kinds of things. And what ends up happening in those cases is the plaintiff is looking to recover for their damages, right? So in how often does it happen?
Or how prevalent is it?
It really depends on the property and the property owner and their tenants, right?
Okay.
So if you have a very nice property that's well maintained and you have very good tenants, then it's not likely to happen very often. But if you have a different type of tenant or you have a different type of property, it may happen more often. So in either case, it's always better to have the protection than not.
Right.
Because I always tell clients, attorneys are for the plan for the worst day possible, right?
Yeah, that's a good point.
So that's what our job is to do, is to protect you from the worst day possible. And so that's what this LLC type structure does. It helps to protect you in the event that worst case happens.
And so when we're always talking about ABC properties and getting your formula together in order to invest, what he's talking about is those A properties, which are rent for a little higher or in a little bit better neighborhoods, have a different percentage of people trying to sue than like the C properties, which could be your Section 8 and in lower rents in lower rent neighborhoods, which might see a little more legal activity. So when you're deciding whether you're going to go in your formula, you're going to go for C properties, B properties, or A properties, that's another piece that you think about when you're making those decisions.
So our producer here feels like we should not let it go for too much longer.
Okay.
And maybe wrap it up with some of the most important issues.
Well, so real quick, can you just describe what it takes to set up an LLC, how complicated or simple is it to run it, how much it might cost, and how they could contact you if they could use your help?
Sure. So they're fairly simple to set up. So they take a little bit of paperwork. You can set them up technically on your own, and you can do that. There's a process that you need to go through. The first one is that you need to register with the Washington State Secretary of State's office. You also need to obtain a business license for that business. And then you need to transfer the property into the LLC, whatever it is.
Right.
Depending upon if it's just a holding company, just to hold the asset, versus a management company that actually does other business, it's a little more complicated. And you may have to have an operating agreement, especially if you have multiple partners in the LLC or multiple members in the LLC. You definitely want to have an operating agreement. There's no doubt about that. And the operating agreement is the contract that basically describes how you run that company, how income is distributed, how costs are allocated, et cetera.
Would we need that as a married couple?
It's always a good idea to have it, even as a married couple.
Okay.
Because, like I said earlier, attorneys plan for the worst day possible, and not all couples stay married. So, so it's usually a good idea to have that.
Okay.
One of the issues that we see a lot of times, and I'll get to the cost. No. I'll get back to that. But one of the issues we see a lot of times is people will own the property or they'll purchase the property intending for it to go into an LLC, but they buy it personally first.
Right.
And then they transfer it into an LLC.
Right.
If you transfer a property from yourself into an LLC and you own 100% of the LLC, no problem. It's not a taxable event in Washington State. If you own a property personally and you transfer it into an LLC that has, say, 2 or more partners, that now changes the ownership percentage of that property and becomes a taxable event, meaning that it's subject now to real estate excise tax. Okay. That also happens a lot at trustee sales. So if you buy a piece of property at trustee sale and it's an individual purchasing it because they were able to get the loan and they walk down there with the notes and whatnot, a lot of times the trustee's deed will identify that person as opposed to the LLC. So you always want to make sure if it's one person buying it and one person owning the LLC, or if it's multiple people owning the LLC that want to buy this property, that you purchase it the same exact way that
Right.
the LLC is structured so that you don't have a taxable event when you transfer the property into the LLC.
Okay, that's good to know.
And then also real quick, there's mortgage companies that can actually help you purchase properties inside the LLC, so you don't have to transfer it in. And there's some that cannot do that. So that's something else to look for when you're searching for your, it's a good idea to get 3 quotes from mortgage companies when you go to purchase.
Yeah.
And ask them that question as well.
As for cost, to answer your question there, so the formation, there's multiple different types of costs that go into this. One is the costs and fees that you're going to have to pay to the state and the city and recording and things like that, and that's generally a couple $100.
A month or a year?
For the setup.
For the setup.
One-time setup
time
fee.
for the setup fee. And then for depending upon whether you do it on your own or whether you go through LegalZoom or whether you go through an attorney, the cost to actually do the paperwork for the LLC is going to vary. Okay. So more complex LLCs are going to be more expensive. Simple LLCs are going to be cheaper. Some attorneys will charge flat fees for it. Other attorneys like ourselves will charge by the hour for it. And it can range anywhere from a couple $100 to a couple $1,000, depending upon how complex it is. So it really just depends on the case.
Well, and I want to say something too. So if it's relatively simple, it's pretty cost effective, especially with an attorney like Jensen. So it's worth giving a call and seeing what that might cost you.
Oh, well, thanks.
Yeah, absolutely. I know that from experience in quoting them out. So.
And then as far as the management goes, every year you have to file an annual report with the Washington State Secretary of State's office, and depending upon what your business is, you have to renew your business license. And then if you are the registered agent for your LLC, so a registered agent is really just the person who is going to receive the legal paperwork for the company. And they always have to be at a physical location. So a lot of times, companies will hire a third-party registered agent, like CT Corporation or a law firm. We do it for a lot of our clients.
Could my tax consultant be my agent?
If they're willing to do it, sure. Your neighbor could be your agent if you wanted to, right?
Yeah.
But that person is going to receive some junk mail, typically. So what we tell a lot of our clients is, if you don't want to receive the junk mail, you could hire a registered agent.
And don't you have to sign that you would be available during all business hours as well? Isn't there an obligation?
Correct.
That
There's
comes
an
with
obligation
being
that
an
comes with
agent?
that,
Yeah.
yes. Yeah.
That's why it's so nice to have an attorney, because then it's part of the, they can be the agent and you don't have to worry about that.
Right, right. And so that may cost, depending upon the fee or the service that you're using, a couple $100 a year. And that's just every year that you roll into your business expenses for the company.
Okay.
Right.
And then
All right.
we need to cover one more important point, because I think everyone needs to know about commingling of funds.
Yes, so this is
it's
extremely important.
It is, yeah.
So if you have a company and it is an LLC, and you need to have separate bank accounts for the funds that are associated with the LLC versus your own personal funds. And neither the two shall intermix. So you definitely want to keep them separate, because if you commingle them, say you use your own personal bank account as the LLC's bank account, the problem there is that the law can look right through that LLC and it's as if it doesn't exist. So you want to ensure that you have two very separate sets of books and bank accounts, and you're not mixing the two.
Right.
And that will protect you so that the LLC can protect you.
Right,
Otherwise it
right.
won't protect you.
Right.
Okay.
Otherwise, it's called what's called piercing the corporate veil, that barrier
Yeah.
between yourself and the litigant.
Right.
And the court will look right through that LLC to say, well, this really isn't an LLC. It's not a corporate structure. Really, this is you personally. Therefore, you personally are liable.
Okay.
Yeah.
Well, great. Thank you so much for all
Yeah.
that information.
Well, thanks for having me.
Thank you,
Appreciate
Jensen.
it.
Thank you, Tasha. We
Yeah,
hope this has been
thank you.
very beneficial. Have a great day.